Nigeria, the 1980s. A nation caught between memory and uncertainty. Just a decade before, oil wealth had flowed like a river. The naira was strong. The future seemed golden. But oil is a fickle master, and by the mid-80s, the river was drying up. Government revenues shrank, debt ballooned, and for the ordinary Nigerian, the promise of prosperity gave way to queues, scarcity, and fear. In this turbulence, one thing seemed untouchable: the banks. Old giants, First Bank, Union Bank, Afribank, they had the weight of history, the security of government, but they were dinosaurs, conservative, slow, bound by bureaucracy. For young Nigerians with ambition, banking was a closed fortress, a place where dreams went to die in paperwork. And then came 1986. Government today announced sweeping reforms in the banking sector, part of the structural adjustment program. Deregulation, liberalization, opportunity. For the first time in Nigeria's history, private banking licenses could be secured with unprecedented ease. It was as though the gates of a financial kingdom had been flung open, and waiting outside those gates were a generation of ambitious, hungry young men. They were bold, restless, dressed in sharp suits, and they would not wait their turn. This is their story. 1990, the banking revolution was underway. Licenses were being handed out. New names were emerging, and among the hopefuls was a young banker named Jim Ovia. He had no dynasty behind him, not even a powerful political godfather. What he had was conviction, a belief that Nigerian banking could be different, faster, cleaner, sharper. With a fresh license in hand, Ovia set out to build what would become Zenith Bank, and his vision, radical for the time, to make technology, not connections, not bureaucracy, the backbone of banking. While older banks shuffled endless papers and forced clients into long queues, Zenith invested in IT systems, real-time transactions, modern terminals, a new standard of professionalism. But vision is not the same as victory. Convincing Nigeria's biggest companies to leave the giants, First Bank, Union Bank, was nearly impossible. Why would they trust their millions to a brand new player with no track record? For months, Zenith fought for every account, every silver of credibility. There were skeptics, there were failures, there were closed doors, but Ovia refused to bend. Discipline became the culture, professionalism the weapon, technology the shield. And slowly, reputation followed. One corporate account, then another, until Zenith became the quiet choice of Nigeria's business elites. By the late 1990s, the experiment had become a powerhouse. Zenith wasn't just another bank, it was the bank for corporate Nigeria. Jim Ovia had arrived, and with him a new model of banking was born. 1990, the year deregulation cracked open Nigeria's banking system. Among the wave of new entrants, two names stood out: Fola Diola, Tayo Aderiokun. Both were respected young bankers of Continental Merchant Bank. They had good salaries, security, the kind of careers most Nigerians would cling to. But they also had a dream. They walked away from safety to build a bank that was not about politics or patronage or bureaucracy, but about trust. A bank where ethics mattered, where customers came first, where transparency was non-negotiable. That dream became Guaranteed Trust Bank. From the beginning, GT Bank felt different. While others clung to dark conservatism, GT projected youth and modernity. Their bold orange branding, their open customer service halls, their culture of courtesy, a smile, a greeting. Good morning, sir. Welcome to GT Bank. In a Nigeria where banks often treated customers with arrogance, this was radical, but it wasn't easy. Regulators doubted them. Older competitors dismissed them as dreamers. Two young men with no deep political godfathers, they won't last, people whispered. Yet, Fola and Tayo were relentless. They recruited bright young graduates. They enforced discipline. They built systems of accountability. They didn't just create a bank, they created a culture. By the late 1990s, GT Bank was no longer the underdog. It was a model of modern banking, youthful, professional, trusted. Its glass-walled branches symbolized helpfulness. Its orange logo became a badge of reliability, and its founders proved that integrity could compete with influence. Fola Diola and Tayo Aderiokun had done the unthinkable. They turned a vision of trust into a financial institution that redefined Nigerian banking. In the late 1980s, while most of Nigeria's new banks were rushing to capture deposits and flood the streets with retail branches, one man took a different path. His name was Atedo Peterside. In 1989, at just 33 years old, Peterside did something audacious. He launched investment banking and trust company, IBTC. It wasn't a traditional commercial bank. It didn't chase market women or petty traders. It didn't advertise shining branches on every corner. Instead, it aimed higher: corporate finance, advisory services, wealth management, connecting Nigerian companies to global capital, and convincing international investors that Nigeria was worth the risk. To many, it looked like a mistake. Why ignore the mass market when deregulation had just opened the floodgates? Why play niche when everyone else was playing volume? For years, IBTC stayed small, a boutique shop in a sea of giants. But Peterside was patient. He was playing the long game. His strategy paid off. By earning the trust of Nigeria's corporate titans and building relationship with international financiers, IBTC carved out a reputation no one else had. And then came the merger. IBTC joined forces with South Africa's Stanbic. The result? Stanbic IBTC, a financial powerhouse that today stands as one of the Nigeria's strongest, most respected banks. Atedo's genius was simple. While others fought for deposits on the streets, he built Nigeria's bridge to global finance. In the world of banking, some men build quietly and some rewrite the roles with fire. Tony Elumelu was one of the latter, young, charismatic, fearless. When he first applied for a banking license, the answer was no, rejected, shut out. But Elumelu was not the type to walk away. Instead, he looked to a struggling institution, Crystal Bank, later renamed Standard Trust Bank. To most, it was a graveyard, a dead end, a place where careers went to die. But to Tony Elumelu, it was an opportunity. Where others saw failure, he saw a blank canvas. With relentless energy, sharp marketing, and an iron grip on execution, it transformed Standard Trust Bank into one of Nigeria's fastest growing financial houses. And then came the boldest move of his career. 2005. The central bank had just announced a wave of reforms. Banks were told to consolidate, to merge, or to die. In the chaos, Elumelu made his move. He led a historic takeover of United Bank of Africa, one of Nigeria's oldest, most respected institutions. It was unthinkable, the upstart swallowing the giant, the outsider taking the throne. Breaking news: United Bank of Africa announces merger with Standard Trust Bank in a landmark deal. It was a masterstroke, from rejection to revolution, from outsider to empire builder. Tony Elumelu had proven himself not just a banker, but a deal maker of historic proportions. Every revolution creates apprentices, and sometimes those apprentices rise to eclipse their masters. In the late 1990s, inside the polished offices of Guaranty Trust Bank, Two ambitious young executives were making their mark. Herbert Wigwe, Ike Imukwede, sharp, driven, brilliant. They were the kind of bankers every boardroom noticed. But notice wasn't enough. They wanted more than promotions, more than comfortable titles. They wanted an empire of their own. In 2002, opportunity came knocking. A struggling institution, little more than a name, Access Bank. To most, it was a footnote. Too small, too weak, a bank destined to be swallowed or forgotten. But to Wigwe and Aigboje, it was a seed, and they knew how to water it. They took over Access. They brought new energy, young staff, aggressive strategies, relentless ambition. They chased customers others ignored. They negotiated bold acquisitions, growing branch by branch, city by city. Within a few short years, the no-name bank was no longer a joke. By the late 2000s, Access was climbing into the top tier, and then the breakthrough. By the 2010s, Access Bank had become the largest bank in Nigeria by assets, a position no one could have imagined when Wigwe and Aigboje first walked into that forgotten institution in 2002. The apprentices had become masters, and Access had become a symbol, proof that Nigeria's banking revolution, bold vision, could turn weakness into dominance. This is the Central Bank of Nigeria. Several banks have been shut down. The revolution had its casualties. The 1990s had unleashed a flood of new banks, but easy licenses brought recklessness. Some were run like family shops, others like personal piggy banks. And then the crashes came. Savannah Bank, Societe Generale, Allied Bank, gone along with the savings of ordinary Nigerians. Confidence wavered. Suddenly, the promise of the new generation banks looked fragile. The dream could have died there. But some did survive, and not just survive, they adapted, evolved, and grew stronger. Zenith, disciplined, corporate, relentless. GTB, trusted, modern, transparent. UBA, bold, continental, expanding. Access, aggressive, hungry, unstoppable. Stanbic IBTC, the bridge between Nigeria and global capital. These survivors weren't just lucky. They were battle-tested. They became the pillars of Nigerian finance. In the ashes of collapse, the true titans were forged. From hungry young men to elder statesmen, the pioneers of the 80s and 90s now stand as titans. Jim Ovia, the quiet tech visionary. Fola Adiola, the culture builder. Atedo Peterside, the investment bridge. Tony Elumelu, the deal maker. Herbert Wigwe and Aigboje Imukwede, the empire builders of Access. They are no longer just bankers. They are philanthropists, investors, political influencers, architects of modern Nigerian finance. Once, they were rebels, breaking into a closed system. Today, they are the system, and the question remains, who will challenge their legacy? Today, a new wave rises. Flutter Wave, Paystack, Kuda, young founders disrupting finance, just as Ovia, Adiola, Elumelu, and Wigwe did 3 decades ago. The lesson is the same. In Nigeria, the future of banking has always belonged to the bold, to those who see opportunity where others see risk, to those young enough to dream and stubborn enough not to quit. This was the rise of the banking industry, the young titans of the 1980s, a story of ambition, of audacity, of empires built and the future still being written.